Brad Niccum here. Happy Monday. I hope everybody had a great weekend. I know the weather seems like it's getting better all the time, so I'm looking forward to some spring warm weather. I didn't get a Monday update out last week because there really wasn't a lot of news to share, and the news that was out there really wasn't a lot of great news. You probably know that rates have gone up, and the 10-year T-bill is back where it was back in November, and rates are with it there too. So we believe that March will be a bit of a turnaround, hoping to see some good news this month. And it is a busy week for news coming out for this week, which will help rates. Fed Chairman Powell speaks in front of Congress Tuesday and Wednesday, so let's hope he stays steadfast on slowing inflation. Wednesday, we have the ADP report, so we really need it to show that job growth is slowing. Thursday, initial jobless claims. And then Friday, the most important news of the week is the BLS jobs report. That's really the report that kicked off everything starting to go bad in the month of February. So we really need to show that job growth has slowed down and maybe unemployment has increased a little bit. And a lot of people ask me, why does job growth and good unemployment hurt interest rates? And it really comes down to how that shows what's happening with inflation. If we have a lot of new jobs and a lot of job growth, that means the economy is still running strong, and that keeps inflation going. And the interest rates really want to see inflation come down, which means we need unemployment to increase. So that's really the main thing. A couple pieces of news that did come out last week that are kind of newsworthy is that FHA did lower the monthly mortgage insurance premium on an FHA loan from 0.85% to 0.55% for all loans closing after March 20th. And on a $300,000 loan, that's a savings of about $73.64. Now, the change really makes FHA be a little more competitive against the Home Ready and Home Possible Fannie Mae and Freddie Mac's community lending program for 3% down borrowers. And it also will help be a little bit more competitive for the conventional 3% down as well. So it's a pretty good savings. But keep in mind, the upfront 1.75 MIP does remain the same. Another change that was announced this week has to do with VA and their upfront funding fee. Current funding fee is at 2.3% for a first-time VA user with no disability. And all loans closing after April 7th, that fee will drop to 2.1. Not a significant drop, but definitely a good savings. There is also notable changes in the 5% down, 10% down more MIP or upfront funding fee for VA as well. Underwriting wise, hey, we're still staying at 24 hours, still closing loans in less than 30 days, clearing conditions super fast, still having a lot of luck with appraisal waivers at the pre-approval position. So if you've got somebody that's putting down 20% and they want to put in an offer and say no appraisal is needed, we can help you get that appraisal waiver up front. And still doing pre-approvals. It takes about an hour to get one done, knocking those out 7 days a week. So if you've got a customer that needs to close fast or somebody that needs to talk to somebody in off hours, have them give me a call, 317-538-9825. And thanks for watching. See you soon.